How RS-49 Crore vanished in 3 hours. What went wrong at MoneyView? What happens when a fintech app's payout rails get hacked? And nearly RS-50 Crore disappears in a single morning? Hi, welcome, and you're watching AranEye, where we uncover how tech and security collide. Today we're diving into the MoneyView breach, how it happened, who was behind it, and what it teaches us about securing financial apps. Before we begin, don't forget to subscribe to AranEye and hit the bell icon for weekly cyber truths. If you find this useful, give it a like, comment your thoughts, and share it with your network. It helps spread awareness and keeps our digital world safer. On October 27th, the Bengaluru City Cybercrime Cell confirmed that hackers drained about RS-49 Crore from MoneyView's systems in roughly 3 hours, using hundreds of mule accounts. 2 arrests were made in India, and the scheme appears to span Dubai, China, Hong Kong, and the Philippines. So how did they pull it off? According to police, the attackers got hold of a privileged API key inside MoneyView's back-end, used virtual servers, VPS, with international exit nodes, and automated small-value payouts into 653 mule accounts, effectively blending speed with scale. Let's unpack the steps. 1. Stolen key. 2. Open internet calls. 3. Velocity payout. 4. Mule cash out. From the company's perspective, some fault lines emerge. Lack of network binding for high-privilege keys, lacking real-time controls to detect payout spikes, and insufficient beneficiary onboarding/cool-off controls. In other words, too much trust, too little guardrail. I'll summarize the key misses. Static keys versus short-lived tokens. Internet-facing API for money movements. Real-time risk engine, either absent or tuned too leniently, mass onboarding of mule accounts, unchecked monitoring, and automation response lag. If you build or audit a fintech product, here's the tight set of controls you absolutely need. Replace long-lived API keys with proof-of-possession tokens and MTLS. Wire sensitive endpoints through private networks or allow lists only. Real-time risk engine. Velocity caps. Geo-deviation blocks. New beneficiary thresholds. Maker-checker for high-value bursts. Rotate all secrets and scan builds automatically. Monitor for abnormal patterns. Drill your response playbook. That's your MoneyRail hardening checklist in a nutshell. If you're a MoneyView user or a partner bank, this incident shows how even big players can be hit via internal Rails exposure. Monitor your account for anomalous credits, debits, update your app, and check communications from MoneyView for follow-up actions. For partner banks, strengthening shared rail visibility and real-time alerting is now ever more critical. The MoneyView hack is a stark reminder that APIs and rails are now the frontier for fintech attacks, and trust must be backed with zero-trust controls. If you found this helpful, hit like, subscribe to AranEye, and ring the notification bell for more deep dives on technology and security. I'll see you in the next one. This is AranEye, your global lens on cyber truth. Stay alert, stay secure.